Hi, and welcome to the September Market Update. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. And as usual, we're going to talk about the financial markets, the economy, and things that we're keeping an eye on for the next month. This was actually a much better month than I thought it was going to be at the start. If you remember, last month we talked about how we have to keep an eye on some things, and indeed the first week of the month looked pretty iffy. There were some concerning things going on, some markets were taking a dive, but then they changed their minds. And in fact, what we've seen is this has been a positive month almost across the board. U.S. markets up at least 3.5%, up to almost 5%, depending on which index you look at. Bonds made money as interest rates declined. You've seen financial markets go up to a degree that was completely unexpected with one exception. And that's Europe, and we'll talk about that because that's actually one of the risk areas that are out there. What drove the markets up? A couple of things. First of all, right now, 99% of all S&P 500 companies have reported, and almost 3/4 beat their earnings estimates. That's up substantially from where we were a month ago. Almost 2/3 are actually beating their sales estimates, also very strong. And if you look at the actual amount that earnings have grown, it went up a full percentage point over the past month. We were beating before, now we're beating by a lot more. So this is a huge gain on the earnings side. It suggests that the companies are doing better as the economy does better. And what we saw this quarter on the economy is, in fact, that we are doing better. We've seen consumer confidence go to multi-year highs, the highest level since the financial crisis, in fact, since before the financial crisis. We've seen business confidence, especially in the service sector, which is the largest part of business, go to 8-year highs. So again, there's a tremendous amount of momentum building up, and it's being reflected in exactly what is happening in the economy. We also have to talk about the risks. What are the risks? First of all, geopolitical risks. The situation in Ukraine with Russia and Europe has not gone away. In fact, it's getting worse. Now there are accusations that there are actually Russian troops on the ground there, and the Germans and the Europeans are actually being forced to consider even stronger sanctions. The sanctions they have are already damaging the European economy, and it's going to get worse. The European economy is showing a lot of weakness, much more so than a couple of months ago, and that's actually the economic risk we have to face. Keep an eye on Europe. That's something we need to keep. That's something that really could go wrong in the near future. No immediate signs of it, but it's something that's worth watching. Finally, the risk we face in the U.S. has more to do with our own markets and is a consequence of the success we've had. Markets have risen to all-time highs or very, very close to them for the S&P and for the Dow. We cracked 2,000 for the first time with the S&P. The problem is we didn't crack it convincingly. We kind of stumbled up to it, and we only did that in the last week of August. We did it in a very tiptoe sort of way. That concerns me. I think the trend of the market is up, but when you look at previous times when we've come close to real milestones, either we blew through it or we bounced and dropped back a bit. And I think there's a chance of that. That said, right now the foundation of the economy is incredibly strong. The U.S. is actually benefiting from crises elsewhere in the world, and the foundation of what we're seeing here is very solid. But we might see some turbulence in the markets, and we'll be keeping an eye on that. Thanks for joining me, and I'll talk to you again next month.